No real news, but I've seen someone post recently. I don't remember who it was, but if you look back when gold made its big runs, like 79 to 1980, there's a huge crisis then, a recession. Paul Volcker had to let rates go to 15%. So it was forecasting some trouble ahead. For some reason, gold does that. And back in the 2000s, yes, gold was in a bull market from '02 to like 2011, but it really started picking up like in 2007 all the way to March 2008 when we topped at 1,000, and then we had the subprime crisis, and then we had a big move up in 2011, and that forecast the European sovereign debt crisis. So I think what's going on now, there's so much out there that is, how can I say, pointing, well, there's some indicators that are worrying, like the Japanese government bond market. The yields there are going up very quickly. The Japanese yen is strengthening. US Treasury yields are still really sticky. They're not really going down as much as people expect them to. What else? The stock market seems to have topped. We're down on all the three indices year to date. So yeah, I mean, as for today, it's just a continuation of what we've been seeing. So yeah, I think gold is pointing to trouble ahead, but it could also be pointing to something that I've been warning about for years since I started this channel, and that's hyperinflation. And I think it could happen, yeah, very quickly. And hyperinflation is not really anything to do with cost push inflation. It's more to do with confidence in the currency. And we have to admit, I think, that confidence in the political and the leaders, central bankers of the West is at rock bottom, I would say. Maybe not in the US. But it's still very divided. Here in Europe, they're using lawfare like they tried on Trump, and they've banned the Romanian guy who won the first round last year, presidential election. They've just banned Martin Le Pen. Is it Martine? Or yeah, Le Pen from running for president in 2027. She will appeal, but it all seems to be falling apart. The social, economic, political environment. And when that happens, Elijah, trust in the currency evaporates because the currency is issued by the establishment. So people might want to trade gold, but I'm going to hold on to it because I don't want to trade gold for collapsing fiat currencies. And that includes the dollar, the euro, the pound, all of them.
You know, I saw something the other day. Can't remember who posted it exactly, but it reminded me just how often gold gets it right. Not after the fact, not as a reaction, but as a forerunner, a barometer of brewing trouble. People like to say gold doesn't do anything, that it just sits there. But let me tell you, gold doesn't sit, it whispers. And if you've been listening lately, it's shouting. Let's go back for a moment. 1979 into 1980, gold was on fire. We saw one of the most spectacular runs in market history, from the mid-hundreds to over 800. And why? Because the system was breaking. Inflation wasn't 2% on some spreadsheet in Washington. It was real. It was everywhere. Gas lines, strikes, chaos in Iran, stagflation. And then Paul Volcker comes in and jacks rates to 15%. Not because he wanted to, because he had to. Gold saw that coming. Gold told you the system was out of control before the policymakers admitted it. Fast forward, 2000s. From 2001 onward, gold starts to build momentum, quietly, steadily. While tech was collapsing and people were still blaming irrational exuberance, the gold was saying, hey, something's off here. And then what happens? In 2007, the real fireworks begin. Gold breaks out. It runs from the 600s to over 1,000 by March 2008. That's before Lehman, before AIG, before the Fed started using its balance sheet like a blank check. Then we get the crash, and what does gold do? It takes a breath, and then it rockets to $1,900 by 2011. right when the sovereign debt crisis in Europe is hitting the headlines. You see the pattern? Gold doesn't follow. Gold leads. And now here we are in 2024, heading into 2025, and gold's on the move again. Not just up a little, breaking out in every currency. In yen, in euros, in sterling, in rupees, even in Canadian and Aussie dollars. The only laggard has been the US dollar price, and even that's now surging toward and through all-time highs. People are asking, why is gold moving so much? What's the news? But gold doesn't need a headline. Gold is the headline, so let's look around. What's happening? The Japanese bond market, JGBS, are suddenly unstable. Yields are surging after decades of artificial suppression, and the yen is strengthening in a way that doesn't match anything we've seen in years. Now you might ask, why is this important? Well, Japan is the canary in the central bank coal mine. They've had yield curve control since before it was cool. And if they're losing control of their long-end bonds, that's a warning shot for everyone else. Then you've got US Treasuries. For all the talk about a soft landing and disinflation, yields are still sticky. They're not coming down the way Wall Street hoped. That's because the bond market smells something foul. It smells supply, massive deficits, and no credible plan to fix them. It smells political dysfunction. It smells a Federal Reserve that doesn't want to cut, but might have to because the system is creaking. And then there's the stock market. The three big US indices, down on the year. Not by a lot, but down is down. Momentum has turned. And this time, there's no room for the Fed to ride to the rescue like it's 2010, because we're still carrying the inflation baggage of the last rescue. You can't save stocks and save purchasing power. One of them has to burn. Now here's the part nobody wants to talk about. All of this, bonds, stocks, deficits, central bank paralysis, it all boils down to one thing, trust. And we are running out of it. Trust in governments, trust in the people who make the rules, trust in the currency that those rules are printed on. And let's be honest, it's not just America, it's everywhere. Europe, it's falling apart, socially, politically, economically. Take France, for example. The establishment has just banned Marine Le Pen from running for president in 2027. Whether you like her politics or not, this is pure banana republic stuff. You don't ban your political opponents from elections unless you're terrified of the outcome. That's not democracy. That's lawfare. And the people aren't stupid. They see this. They feel the rot. They might not read central bank white papers, but they know something's broken. They know the rules don't apply equally anymore. And when that perception takes hold, you get instability, you get volatility, you get capital flight. Gold sees all of this. Gold reflects all of this. It's not just about inflation. It's about hyperinflation risk, not in the textbook sense of rising costs, but in the destruction of confidence in the issuing authority. Hyperinflation is not about oil going up. It's about trust going down. And the worst part is, it can happen fast. Just ask the people in Argentina, or Turkey, or Venezuela. It starts slowly, then overnight your money becomes a joke. I've said it for years and I'll say it again now. Gold is not an investment. It's not a trade. It's insurance against the stupidity of those who rule us. It's your hedge against political corruption, monetary malpractice, and institutional decay. So when I see people saying, well, maybe I'll trade my gold if it goes up a bit more, I just shake my head. Trade it for what? For dollars? For euros? For pounds? All of them are sinking ships, some slower than others, but none of them are safe harbors. You don't swap a lifeboat for a deck chair on the Titanic. I'm not in gold to make a profit. I'm in gold because I don't trust what's coming. And every day, every headline, every press conference from Powell or Lagarde or Bailey only strengthens that conviction.
I was looking past weekend on the live stream with Clive, and silver actually up until Friday, year to date, is outperforming gold by 1% or 2%. So I think the reason people are frustrated is because gold is making all-time highs, like there's no tomorrow, and silver is still stuck here in the mid-30s or so, and the all-time high is 50. But as I said, patience, I think, is needed, and stop buying ETFs, buy the physical, and there's no excuse, in my opinion. I've never bought a silver ETF, and if you remember, I've spoken in the past about how all the gold prices in different currencies have been going up, and how the Japanese yen has been leading this race down to zero. But we're also seeing now that in other currencies, silver is actually trading to new all-time highs, like with the Canadian dollar, with the Aussie dollar, they're trading like above 50. So I think it's, that's what's going to happen. And I think the fundamentals for silver are still really good. 5 years of deficit in the silver market, i.e., there's more demand than silver that's produced or recycled. And we're seeing not just a lot of gold flow to the U.S. In the last few months, like over 2,000 tons, but a lot of silver also is flowing. And who's to say that another billionaire or another two or three is not going to emulate David Bateman? I think it's very possible. And I think the bullion banks are, they're trying desperately, and I'm sure they keep track of the gold and silver bugs and the silver squeeze, and I'm sure they've done their darndest today to keep the paper price down on silver squeeze, but I think it's just delaying the inevitable. Eventually things like that are not sustainable, they fail. And when people want their physical, their argument is that they hedge it on the LBMA, and they buy these OTC promissory notes or forwards, which forwards are just another future. And we've seen that in the LBMA. These OTC promissory note contracts are just, they're not really physical. If they were physical, the Bank of England wouldn't have a delay of like a month to 2 months in delivering gold.
Now let's pick up where we left off, because what's coming isn't just another financial crisis. It's something deeper. It's the unraveling of an entire worldview, and it's happening right now in front of us. You might not see it plastered across the mainstream headlines, but if you've been watching long enough, if you've lived through a few cycles, you can feel it in your bones. Confidence in the system is eroding, not just in the markets, but in the institutions behind them, in the very people who run the show. Let's start with Europe. It's not just the energy crisis or the ECB's ridiculous belief that raising rates somehow brings back industrial productivity. It's political, it's social. It's the sense that the EU, as an idea, is fracturing. You've got Central European countries rejecting Brussels mandates, farmers protesting across the continent, France turning authoritarian by banning candidates like Marine Le Pen from elections. It doesn't matter what side of the political spectrum you're on. The message is the same. If you don't vote for the system will vote for you. And that's exactly what gold responds to. Not inflation reports, not Fed speeches. Gold watches for regime fragility, for moments when the existing order starts to wobble. Because once trust breaks down at the governmental level, it doesn't matter what your interest rate is. The people flee the currency, period. Now let's look at Japan. The Bank of Japan is losing control of its bond market. Yields are rising. The yen, after years of weakening, is suddenly surging. And that makes no sense on the surface. But dig deeper and you realize what's going on. Japanese investors, longtime buyers of US treasuries and European debt, are pulling back. They see their own house burning. They can't afford to underwrite the global Ponzi anymore. And if Japan's out, who's left to buy the debt of the West? No one. That's why US Treasury yields remain sticky. The Fed can jawbone all at once, but there's no bid for this paper. The days of foreign central banks happily recycling trade surpluses into US debt are over. Why? Because those trade surpluses are drying up, and because they don't trust the system anymore. And then we come to the elephant in the room, BRICS, Brazil, Russia, India, China, South Africa. Add in a few new members like Saudi Arabia and Iran, and suddenly you've got a block of countries that control most of the world's energy, a huge chunk of its population, and enough gold to make the IMF blush. And what are they doing? They're slowly building an alternative system, not just for trade, but for currency settlement. They're buying gold, quietly but consistently. Russia and China lead the way, but everyone's getting in on it. They're not doing it because they love shiny things. They're doing it because they're hedging against the US-led financial order. because they've seen what happens when you get crosswise with Washington. Your reserves get frozen, your SWIFT access gets revoked, your economy gets blockaded. So what do? They move to gold, real money, no counterparty risk, no clearinghouse middleman, no politics. And yet most Western investors are still asleep. They think gold is some dusty relic. They think the system will sort itself out. They think this time is different. Well, it isn't. We're watching the slow, silent dismantling of the post-Bretton Woods financial order, and gold is being rebuilt as the cornerstone of whatever comes next. And the beauty of it is, you can front-run that realization. That's what I've done. That's what a lot of people I speak to have done. Not because we're trying to outguess the system, but because we no longer trust the system to even play fair. We're not buying gold and silver for profit. We're buying them for exit velocity, for freedom, for protection. And speaking of protection, let's talk about physical metal, not ETFs, not paper certificates, not unallocated pooled holdings in a London vault you'll never see. I mean real bullion, coins, bars, something you can hold in your hand, something you can pass on, something that doesn't go to zero because someone made a bad derivative bet on the other side of the world. For years, the big institutions have used the paper gold and silver markets, the COMEX, the LBMA, to suppress prices, to manage perception, to give the illusion of abundant supply. But that illusion is starting to crack. We've seen record withdrawals from COMEX inventories. We've seen delivery delays from the Bank of England, sometimes as long as 60 days. We've seen premiums spike at the retail level, even when spot prices were flat. And we've seen sovereigns buying at a record pace. What does that tell you? It tells you the paper game is running on fumes. It tells you that when people really want gold, they want it in hand, not on a screen. They want something real, not just an IOU. And when the next wave of investors realizes this, when they demand delivery, the paper market won't be able to cope. That's when you get a pricing accident, a break in the link between spot and physical, a moment when the true value of gold and silver becomes visible to all. That's coming. Maybe not next week, maybe not next month, but the signs are there. The cracks are forming. And all it takes is one shock, one failed treasury auction, one sovereign default, one bank run, and the demand for real metal will explode. And here's the thing most people don't understand. You won't be able to buy it when that happens, because the people who have it won't be selling. Not for dollars, not for pounds, not for anything. You'll see bullion go, no offer. And if there is an offer, it'll come with a 100% premium. I've said it before and I'll say it again. You buy insurance before the fire, not during, not after. And this is the fire. Let me also say this. It's not just about gold. Silver is a ticking time bomb. 5 straight years of physical deficits. Industrial demand booming. Green energy policies requiring more and more ounces. Mining supply flatlining. And silver still can't break $50. That's not a price. It's a lie. The only reason silver hasn't gone parabolic is because the paper market says it shouldn't. But when the system breaks, and it will, silver will catch up in a heartbeat. And then it'll overshoot. That's why I don't care about the short-term noise. I don't care about rate decisions or CPI prints. I care about positioning. I care about owning the real thing before everyone else remembers why it mattered. So what do? You keep stacking, slowly, steadily. You diversify across jurisdictions. You look into sovereign mints, into local dealers with a reputation for delivery. You avoid leverage. You avoid the trap of quick gains. Because this isn't a sprint, it's a currency regime change. And gold and silver are your bridge across it. You also tune out the noise. You ignore the trolls, the manipulators, the CNBC panel that laughed at gold when it was $1,000. Let them laugh. They won't be laughing when it's $5,000 and their bonds are worth 30 cents on the dollar. And you remember one final thing. Gold is not an investment. It's not a speculation. It's a vote of no confidence. A peaceful protest against everything that's gone wrong with money, with politics, with the arrogance of central planning. And it's a protest that can't be censored, can't be frozen, can't be demonetized because gold doesn't care about your opinion. It just is. And that in a world of lies is everything.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.